If you believe that the race is going to be won by the driver and not by the car, then this video is for you. I'm going to tell you how important selecting the right fund manager is besides selecting the scheme for creating that additional returns in your investment portfolio. I'm going to tell you what to look into a fund manager from a quality and quantitative point of view so that you can pick the right driver. Hello everyone, I'm Shobhit. I'm a FinBiz growth expert and founder of FinBiz Growth Club. We are an aspiring community of new age mutual fund distributors who are determined to change how India invests. So let's first talk about the quantitative aspects which you need to look into a fund manager so that you guys are going to pick the right one. So the first number I think which is very obvious, which we need to look into, what is the total experience which the fund manager has. It is very important for a fund manager to have experience in all the cycles of the industry. So when market is going up and when market is going down, if he has seen all those ups and downs, he will be having a clear-cut idea how to navigate into difficult times. And where you are going to find the number of experience which your fund manager has given into the market or the fund manager is spent into the market, the very obvious choice should be the fund fact sheet which you are going to get from any mutual fund company. So suppose you want to invest in say XYZ scheme of ABC mutual fund company, then you need to get the fund fact sheet and there you will be able to find. So for your understanding, I have taken an example of SBI mutual fund fact sheet, which is going to help you in getting that clarity as where you can see. So just look at this. I have downloaded the fact sheet of SBI mutual fund, and let's assume that in SBI infrastructure fund I want to see how much years the fund manager has spent into the market or into the industry as a fund manager. So the fund manager here is Mr. Bhavin Vithalani, and you can see the total experience he has is more than 18 years. This means he has spent long enough time into the market to get the required information, right tactical knowledge as how to navigate in good and bad times. Other way to look into it is how much time that fund manager has invested or been in that scheme where you are going to invest. So ideally the idea should be to select a scheme where the fund manager has been managing for at least 2 to 3 years time period, because that is going to give a clear-cut indication that whether he is able to deliver the kind of performance which you are looking for. So look at those schemes where fund manager has not joined recently and have spent a good amount of time managing that scheme, so that we know that he has been able to deliver the promises which the scheme is showing. And where you are going to find that number also you will be able to find in the fact sheet, or the better way would be to I am going to share a link with you which is going to help you in seeing those numbers. So you can go to Mutual Funds India website and let me share what you are going to find. All the resources which I am going to be discussing with you, those all are you are going to find in the description. I want you guys to download those links so that you can do your own homework. Now coming back to the experience which you would like to see. So if you look at, this is a website called mutualfundsindia.com, and here you can find all mutual fund companies fund manager details. So let's assume, suppose you want to know more about say ICICI mutual fund. Okay, in ICICI mutual fund, suppose the very famous name is say Nirain. So if you want to know more about Nirain, which fund he is managing and what is the experience, you can select from the list of the fund managers. I am going to select Narain. So you are going to find all his history, what he has done up till now, where he has worked, what is his work experience, and so on and so forth, so that you can get an idea that what is his pedigree, and with that you will be able to find all the funds which he has been managing. So this is going to give you a clear-cut idea that whether this is the right person to give your hard-earned money or your client's hard-earned money to manage. So this is the first thing which you need to do. You need to first understand what is the total overall experience he has, where he has worked, and in that particular scheme, how much time he has spent. Now, once you have done that, the other important number which I want you guys to look into is, I want you guys to look into how he has done in a bear market. Now, please understand that when the market is going up, everybody is going to perform. But the more challenging task is when markets are not doing well. How the fund manager is able to navigate in those times, that also should always be looked into. Now, I want you guys to look into when the market has been not performing well, how the fund manager has been able to manage the portfolio so that he is able to restrict the downside or not. If you remember the famous quote of Warren Buffett, he says, rule number 1 is to never lose money, and rule number 2 is never forget the rule number 1. So if your fund manager is able to restrict the downside in a portfolio, or the market is not doing so well, then you will be able to generate consistent return in the investment. And how you are going to find that? For that, I am going to share a resource with you so that you can see. I am going to share the link, as I told you in the beginning, that whatever I am discussing, I am going to share the link with you. So here, for the downside and upside capturing, I want you guys to look into value research. Any scheme, you can see a discrete period performance, and here you will be able to see year wise in this Access Small Cap Fund, how the fund has performed vis-a-vis the market and equity small cap indices. So you can see if the market is going up, the fund has been going better than the market, and when market is down, the fund is able to restrict better on the downside. So this is a good sign which I want you guys to always keep in mind. Our intention should be choose those funds which is be able to restrict the downside better than the market and capture the upside more than the market. If the fund manager is able to do so, we are in a good hand. So these are the 4 quantitative factors which I want you guys to look into so that you are able to bet on the right driver. Now, once you are clear on that, let's talk about the qualitative factors which you need to look into. The qualitative factors which I want you guys to look into is, first what you need to look into is the portfolio turnover ratio. And why I have taken this into a qualitative? Because it has to more do with the churning of the portfolio. How frequently the fund manager is buying or selling the scripts which he has bought in that portfolio. It speaks a lot about the pedigree of the fund manager. Whether he has done enough homework for the fund, whether he is convinced about his bets, and whether he is going to stick with his bets or not. So if you are able to see the portfolio turnover ratio, which is nothing but what is the total quantity of stocks he has bought and sold compared to the overall AUM, it is going to give you a clear-cut indication how much time he is right picking those stocks and how much he is convinced that he has bet on the right car. So where you are going to find the portfolio turnover ratio, you can find in any fact sheet, and in taking the same example of SBI, if you look at here, you can find the total turnover ratio and equity turnover ratio here. So it is 0.65, which is going to give you indication. Again, you need to keep in mind, if you are taking a sector fund, then the portfolio turnover ratio would be high. If you are taking a diversified fund, ideally the portfolio turnover ratio should be low. So if you are looking to select or give advice or want to invest in a small cap fund, you need to look into the category, what is the average turnover ratio, and compare that with the scheme in which you want to invest so that you can get a good idea. Other qualitative measures which you need to look into it is the style purity. Now, a lot of the time what happens if a fund manager wants to generate additional returns or alpha returns in the portfolio, they are often being deviated from the mandate which the fund is carrying. So a large cap fund investing more than the required in a small or mid cap category of stocks is not going to argue well. Same way, if you are investing in an accrual fund and there the fund manager is investing in more of a lower grade papers, that also is not going to argue well. So what I want you guys to look into is, please be very clear that the style purity, the mandate of the or the objective of the scheme is being held by the fund manager across the time period. Other thing which you need to look into it is, you need to look into it how adaptable the fund manager is when he is doing some course correction. Now this means what? Fund managers are also human beings. They may take a wrong bet, and that may backfire or that may not work for him. So what we need to understand and look into it, if there is a lean period in the performance of the fund, how quickly the fund manager is able to turn it around. If he finds that the bet he has taken or the investment which he has made is not working well, how adaptable he is according to the changing macro and micro environment, and he is able to do the course correction. So if the fund is not having too long of a lean period in the performance, you know that fund manager is able to change or churn the portfolio and get into the right path on a quick basis. Other thing which you need to keep in mind is, if we are in a business where the hard-earned money of the investors is being managed, so the ethical standards which the fund manager has to be showing should be of highest standard. So what you need to look into it, in case if there is any issue with the fund manager's history of managing the fund, any regulatory compliance issues has come up, it should be a big no-no, because this is not going to argue well. And the last point from the qualitative point of view is, in case you want to bet on a fund manager, you need to look into his thought process, how he is going to build his portfolio, what kind of approach he is taking, how logical his thinkings are. And the best place to find that is to look into the recent media interviews which the fund manager has given. So if you find recent interactions which he has done on various platforms, you are going to find a clear-cut understanding as how the approach is. And if you are able to resonate with the approach which the fund manager has taken in those interviews, you are confident and you are in a safe hand. So these are the all four qualitative numbers or aspects which you need to be looking at, so that you can bet on the right driver to get the result. Now finally, what all things you need to be mindful of, how you are going to be taking that final call. So the quantitative and qualitative measures which I have talked to, with that you are going to filter out the fund managers with whom you would like to give your hard-earned money, or you are going to advise your client to invest in. Now from among the shortlisted, how you are going to take the call. So the first thing which I want you guys to understand is that in this investment journey, form is also very, very important. Now skill sets are one part, but if your fund manager is in the form, it is going to help in generating better returns. And when I talk about form, what I mean, that the recent performance of the portfolios the fund manager is managing, if those are doing well, I have no doubt that those momentums are going to be taken forward into the future. So I want you guys to look into the recent performance of the funds which the fund manager has been managing, and that is going to give you a clear-cut indication whether the fund manager is in the form or not. So where you are going to find out, I am going to share the resource with you. The easiest way to do is, I have multiple resources I have gone through, but I find Paytm Money platform, you are going to find the easier way. So if you look into, suppose you want to advise an equity scheme, and I want to see, don't look into the too far time period, say 1 month, 3 months or 1 year time period, and you can see which fund managers schemes has delivered the best returns. So this should be a good filter point to get those fund managers which are able to deliver better return compared to the market, and from there you will be able to take a much informed call. You can filter on a 1 month basis, you can filter on 3 month basis. So it is going to give you a clear-cut idea whether the fund manager which is picking the stocks are in the momentum and it is going to take it forward. Always understand that the momentums are going to play a very vital role. You need to understand that logics are always not going to work into the stock market. It is the emotions which is going to take the stock price much before the fundamentals are going to kick into, or it is going to the stock prices are going to go down much before the performance is going to get into negative. So what you need to look into it, if we are able to get that momentum picture right, I have no doubt that we are going to pick the right portfolio. So it's from the 1 month basis, 3 month basis, or 1 year basis, you can look into it, and then accordingly you can take a call. My advice to you is, in case you are really looking into a momentum aspect of the fund manager, 1 year should be a good time period where you will be able to select the right kind of fund manager for your investment journey. Now, other way to look into it is there are a lot of platforms, companies which are going to publish fund managers of the year. So you have ET Value Research Fund Managers of the Year. You have Outlook Magazine, which is going to publish fund managers of the year into various categories. You have Fortune India, which is going to be publishing fund managers of the year, and then Morning Stars also publish. So all these are going to publish who are the fund managers for the equity category, for the debt category, into a large cap fund and a small cap fund, and so on and so forth. Why I am telling you all this? I am telling you all this that if you are able to find a common thread in all these platforms or companies when they are publishing their fund managers, then you are able to get which is the fund manager on which you want to place your bet. I'm going to leave the link in the description so that you can see on yourself as which are the fund managers which this company have shortlisted, so that you have one more filter to use. Okay, so this is also a good way to approach. Other thing which you need to be understanding is, you need to understand that if a fund manager is managing too many schemes, it is not going to argue well, because he will have too many time commitment, too many, I may say, distractions, for which he will not be able to give full attention to a particular scheme. So whenever you are placing your bet, please make sure that you are selecting a fund manager which is not spread thinly on too many of the schemes. And where you are going to find that? For that also I am going to share a resource with you. You can go to a platform called Stock Edge. Here, if you are going to be selecting on mutual funds, then in mutual funds you will be able to filter on the fund manager basis. So here, if you want to select on a fund manager basis, you can click here. Once you click here, any fund manager you want to work upon, say you want to work upon Naren. Okay, so here you are going to search for Naren. Sankar Naren name has come, and there you will be able to see which funds he is managing or co-managing, and across the time period what is the return the fund is able to generate. So you will be able to find here how many schemes the fund manager is managing, and if the fund manager is managing 10, 15, 20 schemes, it is not going to argue well. You should be avoiding those kinds of fund managers. Another important thing which you need to be keeping in mind, my dear friends, is this. You need to understand that if a fund manager is managing too many varieties of schemes, then he is not able to give justice to all the schemes. So if he is managing a large cap fund, a mid cap fund, a small cap fund, a hybrid fund, a international fund, and so on and so forth, then I'm pretty sure that his bandwidth for all fund managers are limited. And if this bandwidth is limited, and if he is going to spread in all these funds and he need to give attention to all these funds, he will not be able to do justice. So what I would like you to do, you need to select a fund manager which is managing a particular style of fund or a particular theme of fund, and is not thinly spread into too many funds. So that is also a good way to select your fund manager. So I hope I have given you some clarity, some ideas as how you need to select the right fund manager for your investment journey. In case you like this aspect, in case it added value for you, in case this information can help you in making better decisions of selecting a mutual fund scheme according to fund manager, then I would love you guys to hit that thumbs up button, subscribe to our channel, so that in future whenever we are going to publish some new content, you will be first one to know. Do download the resource which I am going to share in the description, so that it is going to help you in doing your homework. Thank you very much for watching. I am going to see you next time.